All right, so the Fed made its move. Was expected a 25 basis point hike in the funds rate to 1.25%. And as I told you, the zombies are making their move. They are buying the dollar, and gold not going down much, but these are the wrong moves. Okay, you want to sell the dollar into this rally, and you want to buy gold into whatever little pullback you get here. As far as the stock market, it bounced higher, which, believe it or not, fundamentally on a rate hike, at least in the initial stages of the Fed raising interest rates or the central bank raising interest rates. Remember what that is. Let's talk about that in very basic MMT terms. That is a net addition to national income, right? The government is a net payer of interest. They raise rates, and that means necessarily the government, it's a fiscal expansion, okay, all else equal. So not that the zombies know that. They don't know that. The stock market's been going up and up and up. So if it goes up, it's not because, hey, they suddenly caught on to MMT and their understanding is now crystal clear. No, it's just reflexive that they just buy. But it might go down. You know, I've seen people talk about the flattening of the yield curve and this and that. So for me, the stock market is highly, highly speculative, as you know, yada, yada, yada. I don't have to get into that. What I'm saying is that the dollar rally and the gold sell-off, if there is one, I checked a short time ago, there really wasn't much movement. Gold's trading like $12.75 last I checked. Those things you gotta sell the dollar. And for me, what this says, and by the way, one of the clearest tells is the 10-year yields down to 2.11, 2.11. Now that is so wrong. That is so wrong. I'm just going to go on record here. Now I understand it. You know, people keep thinking maybe this is the last one or this is going to slow the economy down. What that says to me, 2.11 on a 10-year, is that we have so much not only so much farther to go in the rate hike trend, in the rate hike, policy, but the bond market is totally being run by the zombies now, and that entire position, this bond rally, I'm going to go on record right now and say this bond rally, it is going to reverse big time, big time, okay? But you got to be patient because it's telling you we are still very, very early into this whole rate hike cycle, so don't worry. So that's where it is. And by the way, by the same token, the gold at $12.75, if we're still very early into this rate hike cycle, it's going much, much higher. I'll go on record saying that too. The gold's going much, much higher. There's people who said, you know, you're never going to see 1,300 again. Forget about it. You're going to see 1,400. You're going to see 1,500. You're going to see 1,600. Who knows by the time this rate hike cycle is over. I'm telling you. Remember, we're going to come back. We're going to revisit this video. So that's where everything is right now. And one interesting thing, which is probably acting correctly, is the oil kind of sold off a little bit here. And I think it's because it's also kind of saying we're still early in that rate hike cycle. All right, they're going to put a lot more through. Oil's a separate issue right now. And as I've been calling it absolutely 100% correctly, there is only one thing right now. In that report today, that EIA report that comes out every Wednesday, that was like horrendously bearish. But there was one thing in there, one thing that you got to be aware of. And I sent it out to MMT Trader subscribers. There was one thing in there, very, very, I would say that it makes the analysis a little more complicated, all right? Other than this one thing, that thing was sheer, unadulterated, super bearish. But there was one thing in that report that kind of complicates the analysis a little bit. And those of you who read my email, you know what I'm talking about. If you want my email, I will send it to you right now. Just go to my website, Pitbull Economics, and sign up for a 30-day free trial, and you will get I sent out a lot of emails today, folks. A lot of emails. Big things. Big things. All right, everybody. Remember, Dollar's going down. Going down, everybody. Dollar going down. They're printing money. They're printing money. They're printing money. Actually, rate hikes are printing money. You don't hear them saying that anymore. They're printing money. Everybody, they're printing money. Dollar's going to collapse. They're printing money. You don't hear them saying that anymore. But that's it. Now they're printing the money, and they don't say it. When they were unprinting the money, they're printing the money. Printing the money. Dollar's going to crash. That wasn't printing. That was unprinting. Quantitative easing is unprinting of money. Rate hikes. They're printing money. They're printing money right here. Printing money. All right. See you, everybody. Bye-bye.